All right, good evening, team. You know what? I apologize for the little bit of a weird start we're having here. Yeah, let's just say we're having some technical difficulties, but everybody, today is Sunday. It is February 19th, 2023. A little bit of a public service announcement for the team here. Now, tomorrow was supposed to be the Markets a Look Ahead live stream because tomorrow's President's Day. So the equity market and the fixed income market both will be closed tomorrow. So for everybody in the United States, please enjoy your long weekend with your family and your friends. Enjoy a very, very well-deserved, relaxing day off. Now, I will say we're going to move the Markets a Look Ahead stream to tonight. We're going to talk about all of the major events that are going to be coming up this week on Wall Street. And let me tell you, even though it is a shortened trading week, it's going to be busy. A lot of stuff to talk about, a lot of stuff to do a deep dive. Monday, which is tomorrow, obviously a holiday, there's going to be no live stream, okay? I'm going to be traveling. I have a flight to New York. So the whole day is going to be shot traveling. However, on Tuesday, we are going to be doing an in-depth deep dive analysis into the existing home sales report, okay? So Tuesday, February 21st, 2023, the National Association of Realtors is going to release their existing home sales for January. Now, this is absolutely critical and very, very important to pay attention to because the housing market is very rate sensitive, right? So we've been talking about interest rates. The Federal Reserve has been in a very aggressive, rate hiking cycle as we shift from quantitative easing to quantitative tightening. And if we look back over the past 11 months, existing home sales have declined every single consecutive month for the last 11 months, okay? And we've been talking about this. We've been updating our Excel models. And I think in January, home sales for January will probably decelerate yet again, and that is going to be the 12th consecutive month of declining existing home sales. Additionally, big week for earnings, guys. Huge week. We got Home Depot. We have Walmart, I believe, is also reporting. If we want to talk about the tech sector, one of the stocks that I cover is Palo Alto Networks. Palo Alto Networks is undoubtedly the leader in cybersecurity as it relates to all things cybersecurity infrastructure and zero trust architecture. So we're going to be doing a deep dive into that one. I will be on that earnings call, by the way. I would advise all of you to really listen into that earnings call as well. One of the reasons being is because Palo Alto Networks has a pretty big, client base in the enterprise space. Right, so if you're talking about sales, you can have your SMB sales, you have your mid-market, and then you have your enterprise. Enterprise and strategic is big Fortune 500, Fortune 50, Global 2000 customers, and we could sort of use this earnings report from Palo Alto Networks as a little bit of a proxy to see what the demand is for cybersecurity spend. Now, you guys sort of know my take on that, but we'll talk about that a little bit later on the stream. Let's head out. Let's head downstairs. We're at the 200 Southeast Financial Center tonight, guys. You actually are going to get a little bit of a behind-the-scenes peek. This is the Citadel Securities office. So I'll give you guys a little bit of a tour. Let's see who we have in the chat. I see my friend Gregory is here, Richard Vogel, Shatoya Davis, British Greg, good to see you as always, my friend. Susan Wolin, welcome. Let me zip up my backpack here, and we will head down into the gorgeous Miami. Now, very busy today, tons of traffic. I think Florida in general was just absolutely swamped. I think the Daytona 500 was today and the like. So let's go head out. As you can see here, everything from this side on is totally taken over by Citadel Securities, which is arguably the most successful hedge fund as well as quantitative market maker on Wall Street. This is the southernmost side of the Southeast Financial Center. You can see more Citadel Security office spaces here. But let's head downstairs. We have a lot to talk about. We're going to be doing our Markets to Look Ahead live stream today. A lot of real estate data coming out, as well as a big week of earnings. Hey, Anderson is here. This is mid of Carnival here in Brazil. Good to see you, Anderson. Always a absolute pleasure to see you. Let's head downstairs. Sally is here. What's up? Hopefully you guys had a good weekend so far. For all of us Americans, I'm assuming almost everybody has off tomorrow, right? Let me know in the comments if you guys are working tomorrow. But hold that thought, because usually
floor, lobby.
All right, team. Here we are. This is the main lobby of the 200 Southeast Financial Center. As you could tell, it is completely empty because it is a Sunday and it's President's Day weekend. So nobody should be in the office, including myself, but we got to do what we got to do. Now, if you've ever been here, in the lobby here is just a gorgeous waiting area for the guests, clients and the like. It's just absolutely gorgeous. I think there's a saltwater fish tank I may have showed you guys before. All right, team, we are now on the ground floor, ground level here in Miami. Talk about a gorgeous day today. It was 80 degrees, bright sunshine. It was fantastic, absolutely fantastic day. But guys, it's cooled off quite a bit. I'm actually wearing a sweatshirt. Well, I should say a little bit of a hoodie. I think it's about 74 degrees, low humidity, a little bit breezy, absolutely picture perfect weather here in Southern Florida. And I'm happy that you guys are joining me tonight. Hey, Bree Grams is here. Good to see you. Michael Joseph says Citadel uses the WeWork offices. Yes, so temporarily. So here's what's gonna happen. As you guys know, Citadel Securities, which is Ken Griffin's company, massive market maker on Wall Street and very successful hedge fund, extremely successful. They've moved their corporate headquarters from Chicago, Illinois, down to Miami, Florida. However, they do have temporary offices right here at the 200 Southeast Financial Center. They are currently on the 20th floor, but I would like to say this. They are in the process of building a brand new state-of-the-art Class A office tower in Brickell. But, you know, 200 Southeast Financial Center will be a temporary home. There's many major financial firms in this building, including Goldman Sachs is in here as well. What should we do tonight, guys? I don't even know. Morgan Stanley's in here also. But that is the Miami Tower in front of us. I see Nina is here. What's up, Nina? Always a pleasure to see you. Tanya S. says, hey, Tom and Chad. Hope all is well. Thank you so much for joining us. Nina says, Tom, are you flying out on Delta? I am. I'm actually flying out on Delta, leaving from Fort Lauderdale, actually. So I'm going to change it up. I think I may have told you guys. You can see the Metro Mover coming by here too. Now, really quick, I got to point this out for you guys. You see this building right here that's all like disheveled and sort of like dirty looking? This entire thing is going to get demolished. It says One Bayfront Plaza, but they're going to demolish, take down the entire thing and build another Class A, absolutely beautiful office space. And I think there's actually going to be a little bit of a connector bridge to the Southeast 2nd Street Metro Mover station. So downtown Miami is going to be completely revitalized. There's going to be so many new buildings, and I'm excited about it. I'm excited about it. Richard Vogel says, let's head to the beach. I was at the beach today for a little bit. I was driving past Hallover Inlet. I'm not sure if anybody is familiar with Hallover Park or Hallover Inlet, the place is absolutely gorgeous, really, really beautiful. Wow, Action Kids says you can't even go into One Bayfront Plaza anymore. I think even the parking garage is closed. Really? Well, if you guys want to see an in-depth video on it, because this is big news here in Southern Florida, check out Action Kids' channel. I think he was actually featured in a major publication here outlining the site. So there's a total walking tour of the site. It's a little bit run down, I'm not gonna lie. I mean, I gotta be honest with you guys, but the good news is that it will get demolished, and hopefully, you know, you'll have a building, maybe something that looks like this, maybe a little bit more modern, we'll see. Action Kids, as you know, it's exciting too. The pedestrian plaza right next to 200 Southeast Financial Street, or Financial Center. Yeah, you're right. It's gonna be 70,000 square feet of open space. From the 20th floor, from the office, from the WeWork office, you could actually see down into it. And it's awesome. It looks really, really cool. Yeah, I mean, it's going to be amazing to see the skyline change over the years, even in New York too. There's a lot of different office towers that I'm really excited about, specifically on Park Avenue, that are going up. So, you know, I think over the years, as we do the live stream, we're literally going to be able to see Miami and New York change in real time, which is going to be pretty cool. Right down here is the Whole Foods. Obviously, Whole Foods now owned by Amazon. Hey, Al Baker's here. What's up, Al? Good to see you. Derek says, can't wait to return in July for my BD vacation. Hey, Derek, very nice. Yeah, the traffic was really, really horrible today, but thankfully with the scooter, traffic's usually not too bad because you can sort of go along the side of the vehicles, things like that. I think this is Bentley here, but in the distance, everybody, you could see Brickell Key. Wow, Vivian says very windy in Sunny Isles Beach. Now, you know what I actually made a mistake, and Vivian makes a good point. If anybody's familiar with Sunny Isles Beach, there's sort of two on-ramps to get from Sunny Isles to North Miami Beach. So if you think about the geography in Miami, you have Surfside, then you have Bal Harbor, then you have Hallover Inlet, and then you have Sunny Isles Beach. If you want to get to mainland Florida, like I say, the mainland, you got to go over this sort of bridge, and there's one major on-ramp that goes really, really high in the sky. I don't know if I'm sort of explaining it right, but I used that on-ramp with the scooter, and the wind was so strong, it was literally like blowing me all over the place. So if you're on a scooter or a motorcycle, don't take the high-rise on-ramp. Make sure you take the one that goes under it and then over it, if that makes sense. It's kind of weird engineering how they worked it out, but it is crazy windy there. Beautiful place, one of the most wealthy places in Miami is Sunny Isles Beach. It's gorgeous. Hey, Our Mini Mansion says hello, looks like a nice evening for a walk, watching from North Carolina. Good to see all of our viewers in North Carolina. Good to see you. Derek Dulce says South Beach. Yeah, we were there yesterday. South Beach was looking really nice yesterday. Really, really packed too. This is the Novaco here, which is always very busy and tends to have really nice vehicles outside too. We're now looking at the Aston Martin residences. Check out this plane taking off from Miami International Airport. I think this is the building I'm most excited about though, everybody, the Aston Martin residences. And the reason for that is because they are going to extend the Riverwalk here. So you see all the sort of like the barricades boarded up here. You'll actually be able to walk all the way around. It's going to be really, really nice. But let's jump right into this, team, because it is going to be a little bit of a shortened live stream tonight, because I am traveling back to New York tomorrow, and I got to get up early, so I can't get home too late. It's going to be a big week for corporate earnings, but Aside from the earnings, I think we should focus on two main things here. Number one is going to be the big day on Tuesday when we hear from the National Association of Realtors as they report existing home sales. Okay. Now, if you remember correctly, we've been covering this every single month here on Walks on Wall Street, and for 11 consecutive months, existing home sales have been declining. So, will January be the change? Will existing home sales break the trend and stop decelerating and actually go the other way? I don't know, we're gonna have to find out, but this could be a full year, guys. Once the data comes out on Tuesday from the National Association of Realtors, once again, we're overlooking Brickell Key, by the way, this could be the 12th consecutive month that existing home sales in the United States decline. Now, the obvious reason for those sales declines is a couple things. Main two is the Federal Reserve has been raising interest rates, so the cost of capital is about 100% higher than it was this time last year. So rates go up. If assuming you're going to take out a mortgage and you're not paying cash for your property, well, your mortgage payment's going to be about double, right? I mean, think about, looking at a $400,000 piece of property, you're going to put 20% down. Well, you got to finance the rest of it. This time last year, you could probably get a 30-year fixed rate mortgage. Oh, look at this. The bridge is going up. This looks like a barge ship, though, everybody, doesn't it? Like a tow ship. Anyway, you could get a 30-year fixed rate mortgage for 3%. Now, we're bumping right up to 7%, and that also reminds me, later on in the week, we are going to hear from the Federal Reserve as they release their minutes from the last FOMC meeting, which should be, I don't think it'll be any surprise, but assuming we get another 25 basis point rate hike, that's going to bring Fed's funds rate to about 5%. And you're probably looking at a 7% 30-year fixed rate mortgage. Hey, Jay Trader, what's up? Says Tom, are you off tomorrow? Technically, yeah, but I'm going to be traveling all day, so it's going to be a busy day tomorrow. What about you? I'm assuming you're off too, right, Jay Trader? Richard Vogel is here. Good to see you. Hollywood Bob, welcome. Look at this little teeny tiny boat towing the Legend 2. This thing is massive, and this little guy's towing the entire thing. How crazy is that? That is wild. Zozo Bob says cargo ship. The cargo ship looks like it's going to slam right into this yacht, doesn't it? I think it's a little bit too close for comfort, man. Let's see what happens. Well, it is the official end of the boat week here, right? The yacht week in Miami. Wow, this is the yacht that we saw 2 days ago. Man, that one's really nice. Hey, Jeff W277 says, Tom, hedge funds and institutions use every Fed event as a chance to scare individual investors to panic sell. I don't know about that. Maybe, but I don't know about that. Let's wait here. I want to see what this boat looks like coming by. A lot of boat traffic tonight, everybody. Hey, William Brooklyn is here. This is checking in from Brooklyn, New York. Hello, everybody, and hoping you're having a great night. Right back at you, William. Thank you for being here. I see my friend Brad's brain. This is, yeah, we are. Yeah, I'm going to try out Delta Airlines. Let's get a little bit closer to this one. Look at the big GPS system on the top of this guy. Now, I think I told you guys this before, but somebody who watches Walks on Wall Street I guess supposedly they're a really, or they own a company, I forget. They either own one of the companies that install these GPS systems, or they're just really knowledgeable about it. They sent me an email and said that one of these GPS systems, depending on the size of the boat, can cost over $100,000. Can you believe that? Is that true? I mean, I'm going to take their word for it. I don't know anything about boating, but supposedly one of those big GPS systems that you see on the top, the navigation, could cost $100,000. That's wild. That's ridiculous, just for the navigation. But this thing is massive. My God. Wow. The yacht is called Second Love. Hey, and they're watching Fox Business in there. I can see it. Now, this is an awesome shot of this boat with the W Hotel and Tower in the back. That's an awesome shot, man. Hey, RP McMurphy says, great stream again. Thank you, RP McMurphy. Vivian says, yeah, Tom, I got a 3% fixed rate mortgage last year. That's awesome. Definitely hold on to that. John Abraham, hey, John, what's up? Says, hey, Tom, always enjoy your stream on the full screen. Thank you so much. I appreciate that. So this is what I'm talking about, guys, about the Aston Martin residences. I'm so excited for this. You're going to be able to walk all the way past it. Just imagine the views from the balconies of the Aston Martin building. And it's a really thin building, by the way, too. Now that we have this angle, I mean, look at how thin that is. Such a unique piece of property. You know, maybe one day we'll actually be able to go up there and stream from one of the units to show you guys. You know, I've been getting a lot of emails from you guys saying that you want to see inside these buildings. And we're working on it. We're working on it. Hey, Michael says, hey, Tom, from across the Gulf in Corpus Christi, Texas. How was your weekend? Weekend was good, man. I had a really, really good weekend. Let me tell you about the weather here in Miami this weekend. It couldn't have been better. It was 80 degrees, sunny, and at night, which is right now, it's actually kind of chilly. Well, I'm not going to say chilly, but I'm wearing a hoodie. It's gorgeous weather, but you know, got to get back to New York. Have some business to take care of there. I want to remind you guys, so Tuesday, you know, the first business day of every single month, as you know, and we review this every single month, the first business day of the month, the Institute for Supply Management releases their PMIs, which is the Purchasing or the Purchasers Managing Index. Oh, look at this. You can kind of have a sneak peek into the construction site here. But on Tuesday, we are actually going to hear from S&P Global as they release both their Manufacturing and Services Purchasing Managers Index for February. Now, here's the thing. Consensus is for a reading of about 47. And as we know from reviewing, any reading above 50 signals expansion in the manufacturing sector of the United States, and any reading below 50 signals contraction. Now, if you think about the PMI numbers from the Institute for Supply Management, the past 2 months, we have been in negative territory, just turned negative the past 2 months. But you guys know from watching Walks on Wall Street, you actually know how to interpret the ISM PMI numbers the appropriate way, the correct way, how a professional money manager interprets them, and that is the trajectory of those numbers. It's not necessarily the reading that matters. It's the trajectory of those it's the trajectory of those numbers, right? You know, where are you in the business cycle? You know, I always say this, and I almost repeat it ad nauseum, but it's so critical, guys. It is so important to update your models in Excel every single month when these PMI numbers come out, because you'll actually be able to see a visual representation of the business cycle, okay? So as the PMIs, a retail investor, a novice investor, could look at the PMI numbers and say, oh, it's above 50, everything's great. Oh, it's above 50, it's 60, everything's fantastic. But notice there's a very clear indication here about where the PMIs become very peaky and where they become very troughy, right? So once the PMI numbers started to roll over, and you could actually go back and check this data yourself. All of this data is publicly available for free. Just go to the Institute for Supply Management's website and take a look at it. And when the market topped about a year and a half ago now, the PMI numbers were rolling over 4 months before the S&P 500 peaked, right? So just now, over the last 2 months, if you turn on the main street or the mainstream financial channels like CNBC or Fox Business or Bloomberg, the headlines are all about, oh my God, the PMIs are negative. I can't believe this. But if you knew how to interpret those numbers like a professional, you would know they were rolling over, 6 to 8 months ago, right? So, look for those PMIs to hit their trough, right? And I think if we get a big reading to the downside in the PMIs, there's going to be a lot of fear on Wall Street, but that could actually be a signal that things are bottoming out, right? Right across the street, this is the JW Marriott, another very beautiful hotel, but from what some of you guys tell me, this is a little bit outdated on the inside, perhaps. Who knows? Hey, Mike C., what's up? Good to see you. I see Gary Carpenter. Mike C., welcome. Thanks for joining us. Colleen says, hello, Tom. Good to see you, Colleen. Now we are looking at the City National Bank building. This is Miami Tower. Beautiful addition to the Miami skyline. Hey, Morins, is another beautiful night in Miami. Thank you so much. I appreciate that. Richard Vogel says, how is the humidity during the day? Well, it's not bad now. It's actually not humid in southern Florida right now. Where it gets really humid is in a couple months. So the summers in Miami are very humid. But the winters are actually not bad. But for me, I can tolerate the humidity. Hey, Sunshine NYC is here. Good to see you, Sunshine. Hope you're having a good President's Day weekend so far. Thank you for joining us. Appreciate it as always. You can see the Bank of America Tower in the distance. Now there's two specific companies that are reporting earnings next week that I'm going to be paying extreme close attention to. This is a cool shot of everybody eating right over the waterway here. But very famous cybersecurity company that's actually in my opinion, the leader in cybersecurity. Palo Alto Networks will be reporting their earnings on Tuesday, ticker symbol PANW. Now, I have a couple of predictions for Palo Alto Networks earnings, and I want to make a little bit of a comparison here. But first, let's check out this yacht. That's the actual yacht that we were seeing go by. It looks like they're docking it right here. Now, did anybody see the article that came out that said Elon Musk, well, now that he owns Twitter, he's cutting a multi-million-dollar Salesforce bill? Now, why Twitter would be using a CRM, Salesforce, is kind of beyond me, maybe for like the advertising sales guys, but it should not be a multi-million-dollar yearly bill. Anyway, I digress on that, but here's what I think is going to happen. You're going to have a lot of companies scrutinizing their SaaS spend. And for those of you who don't know what SaaS stands for, it stands for software as a service, right? You're going to have the board, you're going to have the C-suite say, okay, what type of SaaS products are we paying for that we could totally just cut and cancel, right? It's what I like to call the nice to have software products. And Palo Alto Networks falls under the category of a must-have software product, right? The only type of software, or I should say one of the only types of software that's probably going to fare rather well during a recession is cybersecurity companies or leaders in cybersecurity, right? Not necessarily the niche cybersecurity companies like Okta or Ping Identity, but companies like Zscaler or Palo Alto Networks that specializes in cybersecurity infrastructure, right? They handle everything from the SD-WAN, from zero trust architecture, everything. Companies cannot afford to cut back on cybersecurity spending because, God forbid, a company or an organization or a government, a state and local government, is compromised by one of these cybersecurity breaches. That could be the difference between life or death of the company, right? So I think we need to be absolutely locked in on Tuesday as Palo Alto reports their earnings. I'll actually be on the conference call. I would highly advise everybody that's watching this stream also join the call. It is completely free and it's also available to the public. All you need to do is go to Palo Alto's website, their investor relations page, and punch in your email, and you'll actually receive a copy of the link, or I should say the Zoom meeting. And I would definitely join that. Another reason why I think it's going to be important is because Palo Alto Networks has a very large stronghold on the enterprise market, enterprise space. Oh, it looks like the bridge is going to go up. This is going to be cool to see this. I think the boat's coming from the other way because there's nothing this way. Hey, Jafet Perez, this is Tom. Meta is doing subscription for verified like Twitter and Elon. Yeah, I saw that. That's, I don't know how I feel about that. I think that's really just a money grab. I don't know, what do you guys think? Because if you think about, the supposed innovation and, all the money these companies spend on R&D or research and development, that's the big money maker, that's the big R&D, is just paying for a subscription service. Kind of weird. Steph UH, good to see you. Says, did I see Facebook is doing the same subscription service as Twitter? I saw that too. Keith says, Tallahassee's large public hospital was a recent victim of ransomware attack. Yeah, exactly. Created an unbelievable mess. The FBI was brought in. Keith, you're exactly right. And that's another reason why companies, you cannot afford to cut back on critical cybersecurity infrastructure spend. You just can't do it. And one of the predictions that I have, just from my experience in working with some of these major hospitals and home healthcare agencies with these types of data breaches, is that there's going to be regulations requiring these particular companies to spend a specific amount of revenue on cybersecurity. And there's going to be whole industries created about cybersecurity insurance and everything like that. So Palo Alto Networks is definitely one to watch. Hey, MBA Elias is here. Good to see you. We're just waiting for the bridge to go up here. This is the drawbridge going from downtown Miami to Brickell. This should be pretty fun to see. Hopefully we have a massive yacht. Hopefully we'll see the one that has the helicopter on it. But MBA Elias, thank you for joining. I see GG NYC. Good to see you, GG. Oh, I think we're missing it. Wow, that is a pretty big one. What do you guys think? Thumbs up or thumbs down for this guy? I'm not sure they needed to open the bridge for that one though. It is pretty big, but MBLI says Facebook also gave subpar reviews to thousands of workers. Looks like a precursor for more layoffs. I think you're right. That's probably what they do. You know, MBALI, there's a terminology for that. I'm not sure if anybody's, probably you guys have heard of it, obviously. It's called managing you out of the business. And when I was in tech sales as an account executive, the low performing account executives, instead of the company just firing you, so they have to pay you like a severance and all that stuff, they would quote unquote manage you out of the business, which essentially means make your life very difficult, right? They'd put you on PIP, you know, your manager would be breathing down your neck and life would be very difficult for you in order to manage you out of the business, so, you know, they don't have to pay you. Yo, Brad's Brain, good to see you. It's just going down now. Looks like all the yachts are fighting over the parking space there. Now, I'm not sure if you guys could see this, but where I'm pointing at right now, it's just outside of the Aston Martin residences. They're actually elevating the seawall and they're building a dock. So assuming that you live there, you could actually park your boat, park your yacht, and you have an elevator directly up to your apartment. Which is kind of wild to think about, but it is true. Maybe we'll go down there and check it out. We'll try to see what it looks like, or I should say the progress on it so far. Keith says managing out is a common technique in government work since outright firing can be difficult. Yeah, and also if you're fired, right, they got to pay you. They got to give you a package. They got to give you all this stuff. So, you know, they'll manage you out of the business. You know, and that's exactly what MBALI said. They give you horrible performance reviews. They say, hey, since you didn't, you know, meet your productivity output, you got to come into the office 5 days a week now. You know, and they are just breathing down your neck. And look, that's corporate America, man. Hey, DWG, what's up? Good to see you. Dr. Longus is here. Welcome. Good to see you. So, we've been talking about China quite often on the stream, and we are actually going to hear from Alibaba. Alibaba will be reporting earnings on Thursday. So, as you know, ticker symbol BABA is actually what you call an ADR, which is an American Depository Receipt, because Chinese companies are not technically listed in the United States. What you're really buying when you're buying, you know, Alibaba or JD or Pinduoduo, something like that, you're buying shares in a holding company offshore, usually in the Cayman Islands or something like that, that in turn hold the underlying security. I'm actually expecting a pretty good report for Alibaba for obvious reasons. China has finally gotten rid of their egregious zero big C policy, so the economy is opening up there. We actually just got an unemployment reading out of China and Hong Kong. Let's try to cross here for a moment. Unemployment in Hong Kong is at its lowest level ever, I think since the 1980s. So things are starting to open up. Shanghai is not on a big lockdown. There were some revolts, and I think that a lot of the people in China actually successfully managed to get the CCP to change their tune on their policy for COVID, which is good. Hey, Michael Joseph, this is Tom. DocuSign, Meta, Twilio, Affirm, Yahoo all announced layoffs in February. All of tech seems to be tightening. Yeah, and I think it's really just a fact of basic supply and demand, right? During the pandemic, you had so much demand for these products and services, specifically cloud-based software companies. And once the Federal Reserve started raising rates and tightening monetary policy, well, demand starts to taper off, and all of those extra employees that they hired during COVID got to go. And a pretty good exercise that I would suggest everybody do is go to sec.gov and punch in ticker symbol META and then ticker symbol GOOGL. And you'll have all of the financial reporting for both Meta and Alphabet. And I want you to notice the employee growth from 2020 to 2022. Some of these companies literally almost doubled in size in 2 years. So you might ask yourself and you might think, well, if these companies like Meta and Google could just cut all of those employees and maintain the same levels of profitability and the same levels of output, well, what is that going to do for their bottom line? I mean, imagine that, right? You know, if you think about the average salary for somebody working at Meta, it's well into the 6 figures. Same thing for Alphabet, right? So I think an interesting thing that we're going to see is, you know, many people are expecting a hard landing. And if we get a hard landing, what we're probably going to see is an earnings recession, where S&P 500 earnings will probably contract and profit margins will probably contract as well. And we talked about this, we gave an example as we were talking about Tesla. And we sort of nailed this, by the way, here collectively on the stream. We were saying, look, you know, one of the major, I should say, more bullish thesis of a lot of analysts about Tesla specifically is that, well, look at the margins, right? Tesla historically has had plus 30% gross margins on their vehicles. But if you look at any of the other auto OEMs, they're lucky to have mid-single digit margins if they're lucky, maybe. And that would actually be considered fair for the industry standard. But what has happened over the last 4 earnings quarters for Tesla? You've started to see some margin erosion happening, and now they have sub 30% margins. Now, I'm not saying it's going to stay like that forever, but all I'm saying is if you factor in inflationary pressures, if you factor in wage inflation, if you factor in a global semiconductor shortage, and just raw materials and commodities in general are going up, well, a lot of companies are going to suffer from margin compression and perhaps an earnings recession. And I think what we're going to talk about on Tuesday, because we don't have too much time to do it tonight, we're going to talk about, are analysts marking down forward earnings enough? And is this market priced to perfection, or is it a little bit overvalued on a forward PE basis? I would argue it probably a little bit overvalued, but you know, we'll see how earnings season rolls through. This earnings season was like a meh. Yeah, I would generalize it like meh and some margin compression all around. Hey, Iris Lou, what's up? Good to see you. I see Brian Forrest. NBA Elias is Tom. Between 2019 and October 2022, the number of employees on Zoom's book grew by 275%. Yeah, exactly, to a total of 8,422 workers. Yeah, I mean, think about that. And I could pretty much bet the vast majority of those jobs were probably account executive and like customer success jobs. Because think about the demand for Zoom, right? think about the demand for video conferencing, but I'm actually kind of bearish Zoom, kind of always have been, because if you think about like a Microsoft suite, right? If anybody pays for MS 365, you get Microsoft Teams for free in that product set. And that is a direct competitor with Zoom. So again, what did we just talk about? And it's a good point from MBA Lies, by the way. We talked about software that is a nice to have and software that is a must have. Zoom is a nice to have, okay? Because everybody and their mother pays for MS 365. Everybody uses Excel, everybody uses Microsoft Word, and everybody has Teams for free. You don't have to pay for it. So why would I pay for licenses of Zoom when I could cancel that and just migrate everything over to Teams? I don't know. Hey, Texas is here, good to see you. Vivian, welcome. Keith says Apple is beginning to trim, laying off its contract workers. Gail Arnold, welcome. Thank you for joining. Yeah, Brad's Brain says, I think it's really risky to invest in China. You should treat it like gambling in a casino. It is really risky. Investing in China is very, very risky because they do not have to uphold the same accounting standards as, I should say, Western nations. And that's why many of them trade as ADRs. Brad's Brain says, Teams is all I use. Who uses Zoom? Now, let me tell you guys something. I'll tell you a crazy story, okay? At my previous company, it was so ridiculous. Well, granted, I mean, to be fair, the company I had previously worked for, we went through a big merger, like a huge merger. So we were using Microsoft Teams, we were using Zoom, we were using something called Blue Jeans, which is a Verizon product, which is horrible, by the way. We were using Slack, and we were using one other, I forget. Oh, Cisco WebEx. So think about all of those subscription services that we were paying for. That is, I mean, it's such a waste. And think about all the companies, right? We've just been through a massive year for M&A activity. Think about all these companies that are paying for Cisco WebEx, Microsoft, well, not Microsoft Teams, but Zoom, Slack, all of this stuff. That's all going to be consolidated. You know, if I was a CEO or a CFO of a company right now, I would say, look, I would tell whatever IT guy, right? I would appoint one guy and say, look, give me a list tomorrow of every single SaaS product we're paying for, and you prioritize them in an Excel spreadsheet for me by what is a must-have and what is a nice-to-have. And then I would send out a survey to all of our employees to say, look, we're going to consolidate to one infrastructure. Which one are you guys more comfortable using? Once I would get the results back from the team, I would cancel everything. I'd blow it all out. And I think that's what everybody's going to do if it were up to me. Hey, Julia, what's up? So we're going to cross the street, actually, because I want to do this loop. But Julia M is joining us. Thank you so much for being here. Check it out. It says Slack's tools are better than Teams. Now, check it out. Do you think, in your opinion, right, and from your experience, because I'm assuming you use Slack, do you think it is, well, I guess it also depends on, you know, the developer team, or depending on which part of the organization. But if you're a company that's hurting for cash, could you suffer and struggle through with Microsoft Teams as a replacement to Slack? Or do you think Slack is a must-have? And Slack is now acquired by Salesforce. As you guys know, Slack used to be publicly traded on its own. Used to trade under the ticker symbol WORK. And it was actually quite funny. Oh, these people are stuck in the middle. But it was actually quite funny because there was some speculation on Wall Street that an Australian software company by the name of Atlassian The ticker symbol was the ticker symbol is TEAM for Atlassian. There was some, way back in the day, there was some speculation on Wall Street that Atlassian would acquire Slack. So the two tickers would be teamwork. I thought that would be kind of funny. Hey, Jeff277. This is every startup I've worked for hasn't even used MS Office. It's all Google Docs. Really? Jeff W277 says Atlassian makes Jira. Yeah, so like Jira, Confluence. Michael Cannon Brooks is the CEO. But you're right. You're 100% right. Gerard Vincent says Slack is great for tech teams. Good to see you, Gerard. Thank you for your comment. Hey, Mo's Vlogs is here. Welcome. Mike C says when they pose it as it's use teams or lay off a bunch of people, they'll pick teams. Yeah, that's probably the realest comment of the night, and you're right. But yeah, I mean, guys, I was at a company where on my computer we had Cisco WebEx, we had Blue Jeans, Microsoft Teams, Slack, and there was one other one, but I forget. And I think the software product was actually by Uber. It was like Uber Conference. I'm not sure what it was. Maybe it is called Uber Conference. Who knows? Hey, Austin City Limits, what's up? Hey, Tom, thought you weren't going to stream tonight. Yeah, but I'm flying out tomorrow, so I thought I'd do the Markets to Look Ahead live stream tonight. Abdul is here. What's up? Julie M says, I've been using Slack since probably before Tom was born. All right, let's actually go under the scaffolding here. It brings me back to being in New York, walking under scaffolding. MBA Elias says, I wonder if we will see mergers or buyouts with SaaS companies that will suffer deep cuts this year. Oh, you absolutely will, and I think there's a lot of deals that already have been done, right? I mean, think about we talked about Thoma Bravo, which is a very successful private equity firm founded by Orlando Bravo. They did a couple deals this year, right? They did a couple of good deals last year. I think, was Proofpoint, did they do a deal with Proofpoint and Ping Identity, or was it just Ping Identity? But yeah, I think Proofpoint is now taken private now. It used to trade under the ticker symbol PFPT, I think? Something like that. Yeah, but it seems like there's just so many of those. Hey, Ryan Beck is here. What's up? Good to see you, Ryan. We were just doing, just covering all the major events for the next week. You know, we're gonna hear from Walmart. We're gonna hear from Home Depot. Now, we could probably use Walmart and Home Depot as a little bit of an inflation gauge too, can we not? You know, as we look at the average ticket price at Home Depot, we could see if customers are spending more money, and if customers are spending more money, are they spending more money because they're buying more goods and services, or are they spending more money because they are forced to? We'll definitely do a deep dive on that. Hey, sunshine after rain. Good to see you. Welcome. Happy President's Day weekend to you. Hopefully you're having a good holiday weekend. We're walking past the SLS Lux Tower. I think this building has a tennis court on the roof. It's a really nice night down here. So we are now on South Miami Avenue and Southeast 9th Street. Nina says Slack over Teams, agreed. Michael Joseph says Walmart plus Home Depot will be a major inflation indicator, especially Walmart earnings up and Home Depot earnings down. Yeah, I mean, so Michael Joseph is right, and here's what I'm going to look for with Walmart specifically. Well, a couple things, and I'll probably be on that call too. Well, it's probably going to conflict with Palo Alto Networks. It's going to be busy. Earnings season is ridiculously crazy. But it's funny because Walmart actually may benefit from people struggling in a way. Because if you think about the gross margins that Walmart makes, the gross margins are actually higher on store-branded products. And this is something the CEO actually outlined on the previous two earnings calls. He said that consumers are starting to choose store branded, which would be the Walmart brand, over the name brand like General Mills and things like that. And that's actually a benefit to Walmart because it's higher margin products, right? And if they're moving higher margin products that are branded by Walmart, well, you know, maybe that could impact the bottom line in a positive way. I think the one negative, which may be a little bit controversial to say, but we're going to say it anyway, is the theft. And it's been a really big issue, so much so that the CEO and the CFO came out on the last conference call and said, hey, if it doesn't stop, you know, we're going to have to close down some of the stores in the heavily affected areas. And this is very reminiscent of the Rite Aid earnings call that we all listened in on in real time about 6 months ago, when the CEO of Rite Aid said, look, we're shutting down stores in New York because just people are freaking fleecing and stealing everything, okay? That is why if you've ever been into a drugstore in New York, chances are if you want to buy a bar of soap, it's going to take you 20 minutes because everything's locked up behind plexiglass, right? So I think Target, Walmart is going to be a good proxy for that, and that is what I'm going to be looking for. I don't know, what about you guys? Anything that's going to intrigue your brains next week that we should be on the lookout for? Hey, Ryan Beck says, Tom, I think the restoration hardwares of the world might be in for a rougher year than Walmart or Home Depot. Yeah, that's a good point. That's also a really good point. I'd say restoration hardware and probably Wayfair too, right? Now that's another company. I mean, a lot of you guys were saying, you know, putting some names in the chat of companies that are laying people off. Wayfair just went through a major layoff. For those of you who don't know, all of you know, but Wayfair trades under the ticker symbol W, and they are the online marketplace for furniture, right? They sell furniture online, and what's the correlation there? You know, that actually ties in pretty nicely with the stream, because let's talk about that correlation, right? Tuesday, we're going to hear from the National Association of Realtors when they announce their existing home sales. And existing home sales have been declining for 11 months in a row, and they may decline again for the 12th month in a row. So if nobody is buying homes, or I should say less homes are being sold, less and less people are going online to buy furniture to furnish those homes. So that's a pretty good pair trade that we talked about a while back. And I think Wayfair's down like 67% from all-time record highs. It's a really good point. But Home Depot, right? We can use Home Depot as another proxy for demand for institutional building as well. Because a lot of big contractors have major corporate accounts with Home Depot, and we could sort of check that spending. MBA Elias will be interesting on the call, how inflation impacted Home Depot sales with lumber prices way down. That's another really good point. But MBA Elias, I want to know your opinion on this, and maybe somebody who knows the construction business a little bit more than I do could chime in on this. But this is what I've been hearing specifically on Twitter. So lumber futures, right, were skyrocketing in 2021, but they've since collapsed quite spectacularly. And lumber futures are completely round-tripped where they were. I think this is a Shiba Inu dog, right? But think about it like this. A lot of people on Twitter were saying, yeah, lumber futures are down and they're getting crushed, but it's not translating over to the prices in the stores. Now, I can't confirm or deny that because I don't go to Home Depot and buy lumber, but maybe somebody in the chat who's in the construction business could confirm or deny that statement and maybe tell us why, because I would have no idea why that would be the case. If lumber futures are down, but, oh, look at this dog. Two really beautiful ones too. Zozo Bob. Yeah, what was that bright orange car? I think Ryan Beck was saying it was a McLaren. Yeah, but I don't know. That would be my, and maybe it's a stupid question, but if lumber futures are getting pounded into the ground, how come that does not translate over to the actual prices in the stores? Anybody have any ideas on that? Because I really don't know. Nina says Southern California consensus for me is that people are now spending more money, or not spending money, and it slows sales. Interesting. Mighty Mole says my bad knees would never allow me to get in that orange car. I would never be able to get out. It's so low to the ground. And I think that may be another reason why we never see these sports cars in New York City, because the streets in New York are littered with potholes and it would never fly. I think this car would bottom out there. But I really very seldom ever see a pothole here in Miami, to be honest. Will M. This is partly just time and work through the supply chain and perhaps some reluctance to lower prices on the retail end. Thank you for that. Good point. Michael Joseph's existing inventory may be the reason why. Ah, 3T3 is trailing prices based on what retail paid and what wholesale prices paid a couple months ago. NBA Elias is a great question, Tom. It's probably supply chain issues. Steph UH says, I don't think prices are all necessarily going to come down. Might decrease, but yeah, I mean, I don't know. It's interesting. Now, you're seeing some specific categories come down, right? You're seeing some specific categories come down, like used vehicle sales. I mean, I should say used vehicle prices, excuse me, are coming down quite materially. And we know this by looking at the CPI report. This is that very famous, I've never been in here, but a lot of you guys are always hitting me up in my email to take you guys on a walking tour inside the building. But I don't know if they allow filming in here. But it looks like a pretty nice, I guess, bar and grill. Speaking of inflation, guys, I almost forgot to tell you, Friday is going to be a big day, okay? Because if you think the CPI is important as it relates to determining monetary policy, well, the Federal Reserve's favored inflation gauge is actually going to be dropping on Friday, and that is the Core Personal Consumption Expenditures Price Index. Talk about a little bit of a tongue twister for you guys there. Now, the expectation is that we're going to get an increase of about 4.3% year over year, 1/10 of a percentage point less than the previous month. So, you know, CPI is important, the headline number is important, but this number is actually more important. I would give them probably about an equal weighting with core CPI, and we know that core CPI excludes very volatile food and energy. So we'll probably do a deep dive and spend the entire stream looking at that on Friday, assuming we will stream on Friday. Hey, Mike C says that place definitely looks like a no film zone. Yeah, you're right. Check it out. It says luxury watch prices went down. Price for PC/accessories went down as well. Yeah, check it out. That's a great comment there. I read an article about that. I think we may have talked about that one night on the stream, did we not? Or maybe it was you who brought it up. I'm getting confused. I think it was you, check it out, who brought this up. If you look at the third-party, or I should say resale luxury watch market, during the bull run of 2020 and 2021 going into 2022, all the people who, got, quote, I'm using air quotes here, made a ton of money in the housing market, made a ton of money in the cryptocurrency markets, in the stock markets. They were going out and buying, Rolexes, crazy expensive watches. And now you're seeing a lot of them up for sale on the resale market, which is flooding the market with supply. And I think that's why I said at one point, maybe in a couple months, that's when I would dip my hand in the watch market. You guys know I don't wear watches. I don't even own a watch. The only watch that I own is the watch that my friend gave me because I had to wear it to his wedding. But, when the prices are declining, maybe that's a good opportunity for me to at least get familiar with the market. Who knows? Hey, Teresa Diaz is here. Good afternoon, Teresa. Welcome. Thank you for joining us. Clara W. Says, Tom, do you think I should begin my career based on my genuine interest or fulfillment, or should I go the safe route? I really don't know, to be honest. I think everybody's different, but here's what I will say, and it's not, when I say it, it kind of sounds a little bit harsh, but I think it's true. This restaurant is amazing, by the way. I think it's the best Argentine restaurant in Brickell. Very good for you guys to take clients here and whatnot. But here's what I would say, okay? I think the biggest mistake that young millennials and Gen Z people are making as it relates to a career, they say, oh, I don't know what I want to do. I don't know what I want to do, and I want to do something I'm passionate about. It's like, listen, pal, you're 20 years old, you're a kid. You don't know anything. You're an idiot, right? I'm an idiot. I was an idiot at 20 years old. So what you should do is you should try as many things as possible without even thinking about it. Try as many things as possible. Take every job opportunity that is thrown at you, and do your diligence and do your research at which job opportunities are the most lucrative, because if you can make a ton of money when you're young, right, and learn from very good people, learn from very good managers, right, and you save that money, well, guess what? If you come out of college, making six figures at maybe a job you really don't like, but you're making bank and you're saving all that money, just save all your money for 5 or 6 years, and when you're 27, you're gonna have, a couple $100,000 to $1 million in the bank, and then go out and explore your passions, right? Go out and do whatever you want once you bank some money. But what a lot of people fail to do is they sit around and they sit on their hands and say, oh, I don't know if I really love this. I don't know if Listen, it's nonsense, man. You got to attack. You got to go out and do every single thing that you can, because in my experience, what's going to happen is if you find out that you're good at something, you're going to like it, okay? I'm sure Patrick Mahomes loves playing football because he's a freaking beast at it and he wins Super Bowls, right? But if there was a quarterback out there that every time they step on the field, they get clocked, right? Which is me, right? I'm horrible at football. I'd probably get killed if I stepped on a football field. I'm probably not gonna like it a lot, right? So you're only gonna know what you're passionate about, or you're only gonna know what you like, is if you get out there in the marketplace and try tons of stuff and learn from very successful people, right? So take every job opportunity that passes your way. I would get on Twitter and LinkedIn and direct message people that seem to be doing well or who are in very lucrative careers and offer to work for them, maybe for free or for a little internship. And over time, you're gonna find out what you like and what you're good at. But don't just sit on your hands and ponder and wait. You got to take action and explore. Anyway, this is Mary Brickell Village, everybody. Now, the interesting thing about Mary Brickell Village, you see the Berkshire Hathaway, home service realty offices. This is all going to be taken down, I think. So they're going to demo this entire place, and they're going to build super tall towers similar to these, right? At least that's what I heard on the Next Miami. There was a really nice article on the Next Miami. So this may be gone in a few years, which I don't know how I feel about that because it looks really nice. Beyond the Matrix says, Tom, you're absolutely right. I saved my money and invested it since 1988, and now I'm retired at 55. Wow, dude. Congratulations on your success. That's awesome, man. That's really inspirational stuff, by the way. Thank you for sharing that with us in the chat. I really appreciate it. Hey, Dustin is here, says, yeah, it does look nice. Yeah, I don't know, because guys, think about it. This kind of looks nice. And imagine if they demo this entire thing. It's going to make Mary Brickell Village like a war zone for the next 2 or 3 years with all the construction. I don't know how I feel about that, actually. I don't know. Ryan Beck says, I've been hearing some nightmare HOA special assessments taking place in Miami. Owners having to pay six-figure bills to get their building back up to par. You are 1,000% correct. And we talked about this on a previous stream, but what Ryan Beck is saying is 100,000% correct. I'm sure everybody is familiar with the just heartbreaking tragedy that happened here in Southern Florida, unfortunately, with the Surfside building collapse, which is just a total travesty. And it's just heartbreaking even thinking about it. It's just such negligence. But anyway, essentially what is happening now as a result of that, and I think it's actually good, right? Because human life is above everything, right? Is above money. I don't give a crap. That's just my personal opinion. The government is going to be cracking down extremely hard on a lot of these older style condominiums and apartments in Miami specifically. And if they are not brought up to code, they're probably going to condemn the buildings and set them for demolition. Now, what this means is that if you own a unit in one of these buildings, your HOA is probably going to increase the amount you have to pay by a significant amount to do the repairs. So my advice would be, if you're looking to buy in Southern Florida, I would not buy in a condominium building that was built before 2005. Listen, that's just my opinion, right? I'm not saying I'm right, I'm not saying I'm wrong. I'm just saying that's what I would do. I would stay away from anything that was built pre-2005. And what I actually predict here in the Southern Florida market, I think there's going to be a massive flight to quality. You're going to have people buying in brand new buildings, and a lot of those older buildings are actually probably going to get sold off to investors and demoed. So look, if you're looking to move to Southern Florida, stay away from condos. This is if you're going to buy. If you're going to rent, I guess it doesn't matter. But stay away from anything pre-2005 would be my recommendation, because as Ryan Beck said, think about if the buildings were built in the 1950s, right? Or the 1960s or 70s. Just think about how many hurricanes that building has been through, right? Tons. So that causes some wear and tear on those buildings, and if you own an apartment or a condominium or a unit in one of those buildings, you have to pony up the cash and pay for it. Pineapple Waters, Turkey arrested 150 builders and 250 more on the list. The government allowed building on a fault line. Oh my God, dude. Oh, so you're talking about the earthquake that happened there? That's another heartbreaking story. Oh wow, Vivian says, Tom, I have a timepiece, but I never wear it out anymore. It's dangerous to wear it out. That's sad to hear, but... Hey, TC is here. What's up, TC? We're standing across the other entrance to the SLX Lux Tower. Hey, GGNYC, good to see you. Thanks so much for being here. If you guys are enjoying the live stream so far tonight, please feel free to hit the like button. And if you're new here, feel free to subscribe to the channel and share the show with your friends. We go live about 5 days per week between New York City and Miami, exploring the financial markets and real estate. Yeah, Zozo Bob's is 41,000 people dead in the Turkey quake. I can't even wrap my head around that. I am actually at a loss for words on that. I mean, if we're, I'm going to bite my tongue on that. Actually, I'm not. If we're going to funnel, billions and billions of dollars for these pointless wars, why don't we give a couple billion to, these 42,000 people died in that earthquake, man. I mean, I want to spend the taxpayer money on that, not, whatever, I'll digress. That's sick. 42,000 people, man. Wow, Pineapple Waters is used to live in Surfside. Wow. And look, Surfside is a gorgeous community. Absolutely gorgeous. It's right on the water. Now, I think in the location, I should say the site where the Surfside condominium actually did collapse, I think investors already bought it and their plans to develop another condominium on that site. Now, I don't know, guys. I don't know how I feel about that. I think it's a little bit too soon, but, we'll see. Hey, Charles D is here. What's up? This is Tom. Usually buildings built in the 70s and 80s were built better than the ones built later. Think about it. Many of those older buildings survived the test of time. That's actually a good point, Charles. That's actually a really good point. But I agree with you, but I agree with you as it relates to single family and things like that. Especially if you're talking about Miami, Fort Lauderdale, because my house is built in 1951 and the place is like a fortress, right? It's all concrete block, concrete slab with rebar enforced. And that's like a real sturdy thing. It'll probably be there for the next 200 years. But a lot of these, it seems like a lot of the newer stuff, to your point, that's being built in the single family market is like this very flimsy and finicky. Well, I don't know. I actually don't want to say that because that is total speculation, but it just seems like it. I don't want to say it because it's not a definitive, but it seems like it. But if it were me, and that's where I've put my investment money in, if I'm going to buy, single family, it's like 4-unit, I'm very comfortable with getting something, 1950 to 1960s or 70s, because that thing is probably built like a tank. I mean, my home is a total tank. It's not very like aesthetically pleasing like, the other big Miami mansions, but the thing is like a total compound. Like nothing's blowing that over. Knock on wood, please God. I gotta find some wood. All right, there we go. Hey, Ethan G, what's up, man? This is Tom. I know we have a homeless problem in America, such as New York City or even Los Angeles or California. Yeah, we do. I agree with that. It's quite sad. This is a pretty nice shot of the south side of Brickell here. Keith's single-family homes in Florida were built to a better standard following Hurricane Andrew in 1992. What was the worst? Well, I guess Ian was the worst depending on the location in Florida you're talking about, Hurricane Ian was absolutely tragic to Fort Myers and the like. Hey, Optimus 17s is agree on the 1950s built homes. A friend had a home built in the late 90s, and I thought the wall was going to rip off in a thunderstorm, says Optimus 17. Well, it's almost like my house is, it's funny because I can't even hang anything on the wall. I was joking about that with my friend one time because I was sending him pictures of the house. He was busting my chops. He's like, Tom, send me a picture of the house. I never seen it. I'm like, all right, I sent him a couple pictures. Boom, boom, boom. And he's like, dude, there's nothing on the wall. I'm like, dude, I can't stick a nail in the wall, dude. The whole thing is just like concrete. So that's the only downside. It's such a pain to hang anything on the wall. All right, we got to boogie on out of here. This guy's really good, really good. So we're gonna head back to Brickell City Center, and then we're gonna bang a right on South 8th Street, and then we'll head back to downtown Miami. This place is always really, really packed, but it's extremely expensive. Just for like 1 cup or a cone of gelato, it's like $15. It's fairly expensive. I'm sorry. We'll get one more shot of the SLS Lux Tower. This is another gorgeous place here in Brickell. Tom G says it's different drill bits. Concrete can be drilled. Masonry bits. Yeah, you're right, but I don't have any of the stuff to do that. And to be totally honest, Tom, I'm lazy to do it, and it's just like another one of those things that I got to do. But you're right. I need to get those concrete drill bits. It's just another thing on the to-do list, I guess. Hey, Carl Foy says, hey Tom, use command strips. I'm not a big fan of the command strips, to be honest. And I have two really nice pieces of art. They're not like worth a ton of money, but they're worth enough to where I want to hang them professionally. Like if they ever fell and broke, I'd be upset about it. I got them at an art dealer in the city, and I'm talking about Manhattan. They're two really, really nice pieces. I think I actually posted them up on the YouTube community page for you guys to see, but they're gorgeous pieces of the New York Stock Exchange, one of my favorite places on earth. I think I may have posted them up for you guys. Mike C says, Tom, we have concrete block and we have chosen not to drill into the walls. Speaking of Lucid, guys, this company right here is going to report earnings next week. So the Lucid company, this is a SPAC, by the way, so this actually went public via special purpose acquisition company, and they are going to report earnings this week. You know, another company I forgot to mention, everybody, Square, which is now considered Block, is also going to report, so that should give us a pretty nice insight to the fintech market. Keith is Lucid. I still think Tesla's better than Lucid, man. I'm not too big of a fan. TC says, as a Lucid stockholder, I'm nervous. Well, what's the stock trading at right now? Like 10 bucks? I think it's at 10 bucks. Jafet Perez says Square sucks, or Block. Block is what they're calling it now. Oh, they're hiring, guys. Team, look at this. We're hiring at Lucid. Now, let's look at the car one more time. It's reporting earnings. We'll pump it a little bit. Just kidding. It is a nice looking car, but I will say this. I think a Tesla looks much nicer. A Tesla just looks so much more clean. So this one apparently gets 384 to 425 miles for its range. That's actually not bad, actually. Wow, Keith says, Tom, Lucid cars 90 to 240K. TC's is only a recent bump due to rumors in Saudi Arabia. Bregrams is there are hardwall hangers for 30 pounds or more. Yeah. Nicholas P says, Tom, Tesla is way ahead on technology. I would generally agree with that, Nicholas. I think the biggest thing with Tesla is, I would say the most lucrative and most important thing about Tesla is all the data collection. I mean, just think about a massive head start, or what a massive head start that Tesla has over a lot of the other EV companies that are competing in the autonomous driving space. Now, think about all of the different road miles that Tesla has compared to all of these other type of companies. It's just, they're never going to catch up. And I think Kathy Wood did a really interesting piece on it. Maybe I'll link it in the description later when we conclude the live stream, but they're talking about the amount of data miles collected from Tesla as you compare it to maybe some of the other competitors like Google's Waymo. It's just not even to be compared. Hey, Surfboard is here. Good to see you. GWD says Tesla was made as a software upload. Maybe there's a typo there. All right, we'll go this way. Hey, Edward Adams, just need more charging stations before I would even consider an EV. Well, that's a good point, and we were talking about that last week, right? Now, somebody, I forget who it was in the chat, but I guess one of the former CEOs of Ford Motor Company was doing an interview on CNBC. And I didn't see it, but apparently we agree, because if we want EVs to work in America, right, I think the biggest threat to EVs not working in America is the infrastructure. And the reason why is because America is a huge country, okay? EVs is going to work in a country like South Korea because it's just a smaller country. But America is freaking massive, okay? Nobody is going to be able to do a cross-country road trip in an EV, right, on a 300-mile range. It's just not feasible. It's not doable. So number one, you need the infrastructure, but number two, you need a universal infrastructure, which means I think we'll head back up this way. I think that all of the auto OEMs should come together and agree on a universal charging port. Now, I'm not sure if that's already in place. Again, I don't drive, but you need to be able to pull up in a Ford, charge your car, the same way as you would to pull up in a Volkswagen or a Tesla, or you name it, XYZ car company, or it's just going to be so convoluted and ridiculous. So until we could have the battery capacity be expanded to a significant range, we need to make sure the infrastructure is universal. But maybe it's already like that. Who knows? Ed T says, true, Tom, it's like at a gas station. Yeah, exactly. You don't have to worry about pulling up to the gas station and, needing like 3 or 4 different dongles. That's actually a really nice Tesla here. Yeah, Mike C says gas stations are our universal infrastructure. Hilarious. It's true though. Now, full disclosure, I'm a big advocate for EVs. Huge. But I would say I'm a rational advocate. And I think rational advocating for something is so rare, especially in politics, right? Because nobody is going to vote for you if you are a rational human being and you tell people the truth. They're only going to vote for you if you have outlandish, hyperbolic, ridiculous statements that essentially idiots will believe, right? Oil, gas, bad. Oil, gas, bad. It's sort of like that, what's it called? The Family Guy episode? Maybe that's a little bit too inappropriate to talk about, but you got to be honest. Like, look, you got to do this in a way. It's exactly what Jamie Dimon said. I'm not going to summarize it, but if you look at what Jamie Dimon says about the transition from oil, gas to electric, solar, wind, that's my stance. Is doing it in a way where it's not going to bankrupt the country or starve millions of people around the world. You got to make sure you build the infrastructure first. Because the thing about solar, and solar is great, I love solar. Wind is great, I love wind. But not every day is going to be sunny and 70 degrees, pal. And not every day is going to be windy. So you need to build the infrastructure to when it is sunny, we can harness that solar power to be used at a later date and a later time. Right now, we do not have that infrastructure, but it's coming. But it's not going to come right away, right? It's going to take some time. So pretty soon, we're going to be able to generate enough solar power to store it and harness it for a later date and a later time, and things are actually going to work. But again, nobody's going to vote for that. They're just going to vote for hyperbolic sound bites and clips. I call it the dumbing down of society. I'm going to bite my tongue. I can't. Maybe if we do a private live stream, I could really give it to you guys. I'll freaking give it to you guys, but we can't do it. We'll get banned. Hey, Sister Surround is here. Good to see you. All right, so we are crossing Southeast 5th Street. We're going to go back to downtown Miami. And here we have a really, really nice view of the Aston Martin building. I can't wait until this building is complete because it is going to glow bright white. It's going to be an absolutely gorgeous addition to the skyline of Miami. I cannot wait until it's completed. It's going to be a real joy walking around with this building all luminescent. All right, I think we're going to come up on the Capitol Grill here to the left. Now, there's actually a Capitol Grill right next to the New York Stock Exchange that we walk past all the time. Hopefully we'll see some more boats as we go over. Now, we're not going to be streaming on Monday, as you guys know. I want you guys to enjoy your President's Day. But we will be back Tuesday, and Tuesday is going to be it's going to be a very action-packed stream because we're getting some big leading economic indicators that are going to be coming out. That is the S&P Global Manufacturing and Services PMI numbers, not to be confused with the Institute for Supply Management PMI numbers, but we're going to be doing a deep dive in that report. And I think that's going to give us a little bit more clarity about, is this manufacturing going back into growth, or are we going deeper into contraction territory? Yeah, Ian, you're right. That's another thing on Tuesday. Tuesday is going to be a busy day. I'd say the busiest day of the week, but the most important day of the week is Friday because we get that inflation number out. But yeah, we're going to hear from the National Association of Realtors on Tuesday as they release their existing home sales. Now, you guys know we've had 11 consecutive months in a row of declining sales, and this may make the 12th consecutive month of declining sales. We'll see. Check out the airplane taking off. Wow, that's awesome. I love just walking around downtown Miami at night, man. It's a very futuristic looking city. It's awesome. Yeah, MBA Elias says if the inflation number is high on Friday, potentially a 50 basis point rate hike. There's a possibility of it, but if you look at the futures market, look at Fed funds futures, I think it's still about an 80% probability of a 25 basis point rate hike. But I mean, last week, guys, we heard from a lot of Fed presidents, right? We heard from Jim Bullard, St. Louis Fed president, said that he actually advocated for a 50 basis point rate hike at the last FOMC meeting, and he's going to advocate again for a 50 basis point rate hike in a couple weeks. So, I mean, I don't really know. I don't know. It's going to be interesting to see. I think the only thing the market is not taking into account here, and you could look at this by looking at the futures market, it's all right there. The market doesn't think the Fed is going to hold rates higher for longer. And I always revert back to the Neil Kashkari interview from 2 weeks ago, where he said, look, we could bring Fed funds to 5.25 and leave it there for 2 or 3 years, right? Who's even considering that? Nobody. I'm not saying that's going to happen. I said it may happen. And if that's the case, what do you think is going to happen in the housing market with interest rates elevated, right? Many people think the housing market is going to implode, but that may just bring about an environment of perpetual decreased supply. Now, it's a very controversial subject, but it seems like consensus on the street, on Wall Street and Main Street, is that the housing market's going to crash. The housing market's going to crash. Right? That's consensus. I usually try to look outside of consensus, and look, it's very possible that, are we going to have a correction in housing? Probably. But where I think we'll actually have more of a correction is in big office space and multifamily properties that had fixed rate, multifamily property that had floating rate mortgages. Because here's the thing. We talk about how in the residential housing market, Ever since the great financial crisis, the vast majority of loans are fixed rate. They're not adjustable rate mortgages for the vast majority. But if you think about big multifamily deals, I'm talking about 250, 300 units, okay? A lot of this stuff is floating rate debt. And I gotta run. Man, I really want to talk about this, but I gotta run. I can't miss my flight tomorrow. I'll leave you guys off with this, all right? Steven Schwartzman, our good pal, loves Steven Schwartzman. Look up multifamily Steven Schwartzman floating rate debt. We had some big news come out yesterday about it, but I can't talk about it right now. I'm going to go off on a tangent and I'm going to miss my flight. But guys, I want to wish everybody a very happy President's Day weekend. Enjoy it, relax, recharge, and I'll see all of you back in the Big Apple on Tuesday. So if you're new to the stream, feel free to click the subscribe button. Tell your friends about the show, share with your friends, family, whatever, colleagues, whatever you got to do. Click the like button on the video, and we'll see you guys later. So TC, thank you so much for joining us. Michael Joseph, I appreciate you. Austin City Limits, thank you for being a great moderator. Richard Vogel, thank you so much. ATC, thank you. DWG, Sally, my friend FredX, I appreciate it. Zozo Bob, thank you. Ken Glass, Hollywood Bob, Brad's Brain, thank you so much. MBA Elias, Sanjeev, Abdullah Muhammad, New Guinea, DM, thank you so much. I appreciate you. Bree Grams, Surfboard, and to the Mighty Bull, have a good night wherever you are, because there's always a bull market somewhere. You just need to know where to look. Andy from South Korea, thank you so much for watching, and we'll see you guys later. Take care, and thank you for watching Walks on Wall Street.